So by next week, by special grace of God, we're going to be starting our hydrocarbon tax, which is going to be the last topic for me in this diet. So I'm going to send the materials to you guys so that you can see what we're going to be talking about ahead of the class. Okay, if you have seen the question, Busayo, please read for us so that we can start the class. Or any other person apart from Busayo. So now the class has started.
Good morning. Good morning, everyone. I'll read for us today. Can you hear me, sir?
I can hear you. We can hear you. I can hear you.
Okay. Question 1. Hayland Nigeria Limited commenced business as a manufacturer of stationery on January 1st, 2021. The company in December 2020 acquired all the assets and liabilities of a foreign company operating in Nigeria.
Pause.
Okay.
Pause there. Do you remember what we talked about with constituted company? Do you remember when we talked about a constituted company? We said a constituted company is a company that was being formally run by a foreign company rather, and passed on to a Nigerian company. Okay, and we gave conditions. We said one of the conditions for these companies is that when they take it over, when the Nigerian company take over, Nigerian companies must carry on the same business as that of the non-Nigerian company. So their business, the business they want to also be carrying on, will not be materially different from what the foreign companies are doing. We also said for that purpose, they must inform the tax authority about that, about the reconstituted company. They must inform the tax authority and inform the tax authority. We said that inform tax authority about the FIRS must be aware. Business carried on must not be different. Must not be different from the foreign companies. Okay. And if these are taken into consideration, okay, and there are concessions that I told you in my last 2 or 3 classes that the company will get. Number 1, we said assets shall be taken over at taxing down value. 2, no initial allowance be granted on the assets. However, annual allowance to be granted on the assets shall be on taxing down value. We also said that loss of a reconstituted company and be carried forward for a maximum period of 4 years. We also said commencement rule and cessation rule shall not be applicable to this So that is reconstructed company. So examiner in this question had given you a question where the examiner now started talking about reconstituted company. So in that regard, because the examiner started talking about reconstituted company, you should know that the examiner might go towards that direction. So that's how to know the direction where the examiner is going. So they will start by introducing the question to you. In our last class with you, I remember the introduction of that question has to do with Schedule 7, interest on loan. And you remember, I told you in my last class with you that interest on loan shall not be more than 30% of earnings before interest, tax, depreciation, and amortization. So if a company obtains a loan, the allowable portion, the allowable loan in that particular year, we said it shall not be more than 30% of the earnings before interest, tax, depreciation, and amortization. That was what we discussed in my last class with you. So the examiner, whenever they set question, examiner goes as far as trying to make you see their direction in the question. So the direction where the examiner is going would always be seen in the introduction of the question. So I have noted number one, which is reconsider company. Go ahead, Mary.
Okay. Lolan Incorporated. Sorry, let me start from this part. The company in December 2020 acquired all the assets and liabilities of a foreign company operating in Nigeria, Lolan Incorporated, and got it reconstituted for turnaround and better profitability. The directors of the newly reconstituted company have just considered the drafts, the financial statements and annual tax return prepared by the financial accountants for the year ended December 31st, 2021. In the course of the board meeting, diverse opinions were expressed by members on the treatment of dividend received, that is 3.6 million, by the company on equity holding from another Nigerian public limited liability company. The dividend received are also part of the proposed profits to be distributed to shareholders of the company in form of dividends.
Don't go. Hold on. Number two. This examiner is trying us and wants you to remember section 19 of CETA. You remember? I told you section 19 of CETA because we have done all these things. And I will not be happy if you can't remember all these things that we have done. Excuse me, guys. Section 19 of CETA says something that companies shall be subjected to tax on dividend distributed to the shareholders where the following occur. Number one, there is no total profit. Number two, there is total profit, but the total profit is less than dividend declared, right? In the magnanimity of the tax law, the tax law now says, this might be a problem to the taxpayer because the taxpayer that has not made profits can actually distribute dividend, maybe from retained earnings. So in the last year, they have paid tax and their tax has been confirmed okay. But these guys have retained earnings, but this year they made loss, but they decide that they want to distribute to their shareholders. So why do you now subject dividend to tax again? So Finance Act 2019 brings the following exception, or exemption rather, exemptions to section 19, subsection 1. What are the exemptions? The exemption says if the dividend is derived from the following, they are exempted from tax. 1, the dividend is determined or is derived, that is dividend paid, is derived from retained earnings. The retained earnings should be exempted from tax. I have taught you this before. If it is from franked investment income, it is exempted from tax. It is from profits already exempted by the provisions of PPTA, capital gains tax, and pioneer legislation. You remember when Mr. Idris was teaching you pioneer legislation, he would have told you that dividend paid to shareholder during the old trade, during the pioneer period, are exempted from tax. So we are also saying if dividend is from this, is exempted from tax. Number 4, you remember I said if the dividend is from real estate investment company, it is also exempted from tax, provided at least 75% of such dividend, of such earnings, of the dividend is distributed to the shareholders. So we have done all this. We have done all this before. So that is what examiner is trying to also bring out in this second part. Continue.
Okay. All efforts made by the financial accountant to explain the position of the company's Income Tax Act 2004 as amended on dividends were rebuffed by majority of the members. Being a reconstituted company, one of the directors posted that the possibility of the company enjoying some tax reliefs or incentives from the government, which may impact the company's profitability positively, was very high.
Plus, number 3, tax incentives. This company is a reconstituted company for the constituted company. You can see how the examiner is going. The examiner is taking it one after the other. Examiner has talked about the constituted company, talks about their incentives, and talks about dividend. Go ahead. Go ahead.
The managing director of the company, following the decision of the board, has contacted your firm of tax consultants to help provide professional advice on the issue discussed. The following details were extracted from the company's financial records for the year ended 31st December 2021. All figures remain constant. The following additional relevant information was provided. Okay.
Let's start one after the other. So, how do you attempt question under examination condition? I haven't read all this introduction. The next thing you do is to take it one after the other. the additional information and start attending to it one after the other. Okay. So let's go ahead.
Okay.
Number one.
Additional information. Number one, subscription and donation consisted of Subscription Manufacturers Association of Nigeria.
Before you go to it, number one, is that an allowable subscription or not?
Not an allowance.
You said it's not allowable.
Yes.
Give me your reason.
Donation to what? Please read again.
Okay. Subscription from Manufacturers Association of Nigeria, then donations, state
Wait now,
flood.
that number.
Okay.
That number
Number
one.
one.
Subscription to Manufacturing Association of Nigeria, is it allowed or not allowed?
Allowed.
Why are you not saying it's not allowed? Number two.
Number two, donations to State Flood Victims Relief Fund.
Is it allowed or not allowed?
It is allowed.
This examiner,
Allowed.
thank you, has also brought in donation during pandemic and other exigencies. You remember, I have talked to this before. I said such a donation shall not be more than 10% of accessible profit. Okay. But I know for sure when this examiner was solving this question, his mind did not go to this one. But I will show you something when we are doing this question. Okay. That's bad.
Okay.
Yes.
Donations to Royal Elite Brothers Club.
Allowed or not allowed?
Not allowed.
Not allowed. Okay. Next.
Number two, allowance for doubtful debts included. General provision.
Allowed or not allowed?
Allowed.
Not allowed.
Allowed.
Who is that?
General is not allowed though.
That's why I said it's allowed.
Olushola, what is wrong with you? It is allowed, right? Or not allowed?
I said disallowed.
Okay. Your voice is too thick. Your voice is too thick. That is why. Okay, it is not allowed. Okay, it is not allowed. The next one, specific, allow or not allowed?
Specific is allowed.
A or D?
A. Allowed.
Okay, bad debt recover, A or D?
That one is
my student. So, anytime you see this question, just go and look for general provisions. Disallow that one. Any other one will be fine. But in a case where they put
bad debt recover.
No, not that one. Customer loan written off. I'm saying that again. Where you see customer loan written off, that is not allowed. Okay? So in their schedule, they can put that as part of it. So when you see customer loan written off, it is not also an allowable deduction. We'll move on to the next
one. Okay. Number three, repairs and maintenance was made up of repairs of manufacturing plants.
Allowed or not allowed?
Allowed.
Good.
Improvements to industrial building.
Allow or not allow?
Not allowed.
That should be capital expenditure. Not allowed.
Allow or not allow?
Not allowed. Improvement.
Some of you are not sure. You are not talking. You just kept quiet. I have not
Okay,
heard.
why is it
Not
not allowed?
allowed.
Because
Wait. I've not heard Omomi's voice today. Omomi, where are you?
I've been talking, oh Jesus.
I've not heard your voice today. That's why. Not allow. Allow or not allow?
I've just increased the volume. Answering.
Not allowed.
Not allowed.
Okay. Busayo, I've not heard your voice today. What is your position? Ibukun,
Not
what is
allowed,
your
sir.
not allowed? Ibukun,
Yeah.
what is your position? KG, what is your position? I've not heard your voice today, and I will not agree.
Not allowed. It's not allowed because the capital expenditure.
It's capital expenditure. KG completed it. Okay,
that's fine.
now it is not allowed. Now, what is the implication of that? Mr. Jose, you're welcome. What is the implication of that?
Capital allowance.
Capital allowance will be calculated on that. So it is an addition to the assets. Therefore, on that, you would have to add it in the current year and calculate capital allowance on it. Do you understand? Next, delivery van. Allow or not allow? Maintenance.
Allowed.
Good.
Allowed.
Okay.
Allowed.
Okay. Now the next one. Legal and professional fee. Audit
Allowed.
fee. Good. Legal fee. Allow or not allow?
Allowed.
Olodo. You see that legal fee? They put it there in respect of acquisition of lease.
The acquisition of lease.
Any cost you incur in acquisition of capital expenditure shall be capitalized. Therefore, that lease is going to be capitalized. Okay? The next one.
Audit fee.
Audit fee. We have said that one is allowed.
Okay.
Other operating expenses.
Mm.
Oh, yeah, now.
Expenses on increase in share capital.
Allow or not allow?
Not allowed.
Next.
Fines for traffic offense.
Allow or
Not
not allowed?
allowed.
Not
Not
allowed.
allowed.
Not
Christmas, not allowed. Christmas or Eid Kabir gifts to customers.
Allow or
Not
not
allowed.
allowed? Not allowed.
Allowed.
Not allowed.
Wait,
Embezzlement.
sir.
If they
What
put,
is the gift? Excuse me, sir. What if the gift is a branded gift?
Branded gift will be allowed. That's what I wanted to say.
Uh-huh.
So imagine you branded a gift and you give it to your customer as Christmas gift. That will be allowed. Reason, you are using it as an advertisement of your business. You are promoting your business. For all this generic Christmas bonus, AMPA, all those things, they are not allowed.
Okay. Embezzlement by
but you know that in your company, you would have hidden it as other expenses until the tax person now starts looking into it. Imagine if you have 3,000 lines.
All the put in CSR.
Do you understand me? You can't look at everything. So you can also put it as CSR depending on the industry you operate. Because for oil and gas industry, if you make any contribution to the host community, okay, that will be an allowable reduction. The community that you are. So if you go and patch it there, it will scale through. Okay? So that is that. Let's go ahead.
And measurements by cashiers.
Allow or not allow?
Not allowed.
You can't allow it. You have to look for a way to secure your business. Next.
Sundry, all allowable.
Good. We leave that. So that is, we move on to the next one.
Yes. Tax written down values of qualifying capital expenditure as at December 31st, 2020. All figures remain.
Look at this examiner. Examiner gave you, what's wrong with this? Tax written down value as at 31st 12 2020. Now, in this our question, by implication, this will mean as at 2021. Abi?
Yes.
Talking of, in our question, our financial statements is as at 31st 12 2021. This will mean 2022. Abi? Year of assessment.
Yes.
Date of acquisition of the first asset. The first asset was acquired 7/1/2017. Tax year will be what? 2018. Abi?
Yes, sir.
So it will fall within 2018 year of assessment. Abi?
Yes, please.
And because we said if a company is a considered company, all assets of the previous company will be taken over at tax now value. That is why this is happening. Now, in 2022, if we bring in an asset, how many years would that asset would have used before we bring it into our 2022? Especially for this one. How many years would the asset would have used before we brought it into our books? The asset would have used 2018, 2019, 18/1, 19/2, 2020, 3, Abi, 2021, 4. Abi, let's go again. I want you to understand this. The asset was acquired 7th of January 2017. And our accounting year end is 1/1/2018. Our base program on 2018 to 31st/12/2018 for the assets that we acquired. For the asset we acquired in 2017. If you do our asset allocation schedule, that asset will fall within 2018 tax year. Abi, please talk. Do you understand what I'm saying? Let's go over it again. Our asset allocation schedule. You remember, I said we have tax years, Abi, basis period, and QC. Let's go. In 2018, our basis period will be 1/1/2017, Abi, to 31st/12/2017. Any assets that we acquire within this period, Abi, will fall within that. So we have acquired industrial building, Abi, in the question, please talk, and non-industrial building. Abi?
Yes,
Abi,
please.
they will fall within this period. Let's go again. In 2019, 1/1/2018 to 31/12/2018. No assets fall into that category. Abi? None.
Mm-hmm.
In 2020, 1/1/2019 to 31/12/2019. Which asset fall into that category? Motor
Manufacturing
vehicle and manufacturing plants. Abi?
Yes.
Yes.
In 2021 year of assessment, which is 1/1/2020 to 31/12/2020, furniture and fitting fall into that category. Abi?
Yes, sir.
Yes.
Okay, now you understand this table. I am now saying, go back to this place. I am now saying the current year we have now, for the purpose of this our question. If you look at our financial statement ended 31/12/2021. Year of assessment will be what? Please talk.
2022.
2022. Good. Now, the first asset that we acquired in 2018 would have used year 1 in 2018, Abi?
Yeah.
Year 2 in 2018, year 3 in 2020, year 4 in 2021. So if I am bringing it in 2022, that means before now, this asset had used 4 years.
4 years.
I want you to understand that concept. We go again.
That's 4 years.
It has used 4 years. So that means you remember that for industrial building and non-industrial building, the number of years building use is 10 years. Abi?
Yes.
Now, before I bring it into 2022, it has used 4 years. How many years is left for that asset to use? 6 years. Abi?
Yes.
Okay?
Hello, sir.
Yeah.
Look, please take that part again. I think my network went off for a few minutes.
Who is that? Who is that?
I'm
That
on.
my friend. Okay. Let's go again. Did you remember what I said about? Okay, let's go. I said the first asset was acquired in 2017. And when you look at this, in 2017, our basis period will be this, Abi, and our tax year will be 2018. So in 2018, the asset has used year 1. In 2019, asset has used year 2. In 2020, asset has used year 3. In 2021, asset has used year 4. Abi? That means when I'm bringing it in, and you know that taxing down of my previous year, that is the closing taxing down value, will be my opening taxing down value in the current year. So if this is 2021 taxing down value closing, in 2022, it should be my opening. Abi? So we are now saying, before now, these first 2 assets are used 2018, 2019, 2020 tax year, and 2021 tax year. how many years have they used before now? They have used 4 years. And I said, we all know that building is 10 years. Abi? So before 2022 tax year, building, we have used it for 4 years. How many years will be left? 6 years. So to get my annual allowance for that, I'll say tax minimum value divided by n minus x, where my n is the total number of years the asset is supposed to use, while x is the years already used. Years already used. This is total number of years. Okay, and this is the tax minimum value. Abi? So that is that. So I am trying to explain that the first assets, that is the industrial building and non-industrial building, had used 4 years before we took it over. Do you understand that? Let's go.
Yes.
Good. Now, the next one is the one we acquired in 2020. In 2020, the asset would have been used year 1. 2021, the asset would have been used year 2. That means any assets that we acquired in 2020, according to this my table, had been used for how many years before we took it over in 2022? 2 years. The next one. Furniture and fitting. So for this one now, it is motor vehicle and manufacturing plants. The next one, the one we acquired in 2021, would have only used 1 year before we took it over. Abi, would have only used 1 year. That is only in 2021. And in 2022, he took it over. So that means this guy had only been used only for 1 year. This had only been used for 2 years. And this had only been used for 4 years. Do you have any question with regards to that? So if there is no question, what is the examiner asking us to do? The examiner said we should compute our tax liability. But I always like to compute my capital allowance first. Or if I don't want to compute my capital allowance, I can quickly go ahead, and so that I will not be destabilized. Capital allowance can always stabilize you in the exam. Start with the one that you know. I've always said it. So what is the name of this company that we are taking over? The name of our company, rather. The name of our company is
Island.
Island. Are you getting my explanation, please?
Yes.
Island. Good. Nigeria Limited. See how fine my handwriting is. Some of you, your handwriting is not as fine as this. Even though I've not seen your handwriting before. What is the relevancy of assessment? So, computation of assessable, it's not assessable profit. Computation of tax liabilities. Oh, it's liability. For 2022 year of assessment. Where are we starting from? We're actually starting from our net profit. How much is the net profit? Yeah, how much is net profit? 26,400. Abi? Add and deduct. The first one is the subscription. Under your subscription, we have Royal Elite. How much is Royal Elite?
100.
100. Next, allowance for down students. How much?
12,500.
For repairs and maintenance. You remember that improvement is capital in nature. How much?
1,400.
Legal costs. Acquisition of this. How much?
630.
Next, embezzlement. How much?
500. What about the fines for traffic offense?
Fines for traffic offense. How much?
250. And the Christmas and the Cabri gift.
How much?
Maintenance for delivery van.
Repairs and that one is allowed. Increase in share capital. Some of you need to go and read the concept of adjusted profit that I taught you. Watch the video again if you are still having issues with this topic. Abi, any other information that we have not captured? So when you are done with that, you will now go back to the body of the question. The body of the question, apart from the income. Income, we have dividend received. I have told you dividend is not taxable income. Have you? You disallow it. When you disallow it, you subtract. It's not taxable. The next one. You go back to the expenses. We have depreciation. $7,500. We are done. It's adjustments for our profits. We are done with adjustment of our profits. Another thing I will do is I will first disallow, just like I told you the other time, I will disallow donation to victim of something the other time. What is that? Of victim of flood. How much is the donation to victim of flood? 4,900. This should be my accessible profits before donation. Okay, so get me my accessible profit before donation. Someone is adding all those. So get me all the expenses first. Add all this together. This. Subtract this and add this and add this. Get me my value. Okay, what is my value? Who is adding for us?
I got 29,780. Can someone confirm, please?
Confirm? Sweetheart, where are you coming from? How will you get 129?
I said 29.
It's 29.
Okay.
29,780.
Okay. Good. So add the two together. What do you have?
56,180.
56,180. 180. Your donation now. Maximum donation shall be 10 over 110 multiplied by 56,180. What do you have? What do you have? Give me a figure now.
5,107.
5,000. Okay. Donation paid 4,900. Lower of the two. 4,000. Accessible profits. How much?
$51,280.
Now, the reason why I have to show you this is, peradventure, the donation of this guy is more than 5,107. We will restrict it to 5,107. But now that is less. We will not bother ourselves. Okay? Again, why did I use 110, 10 over 110? If you subtract from 56,180 and you subtract 5,107, what will you have? You have 51,007 something. What? Maybe 0 or 2 or 3. Abi, confirm that.
51,073.
Abi. So if you take 10% directly of this, you will get this value. Okay. So this would have been our accessible profits. If the donation was actually more than 49, would have restricted it to this guy, and this is what would have subtracted and get this value. But since the donation is no more than what the guy already paid, you will take what he has paid. Do you understand me at all? The dividend is received net. Yes. Whether it is received net or gross, you disallow it. Do you understand? You don't. So we move to the next one. Capital
Sorry,
allowance.
I have a question. For this donation, it's the total donation because from what I see here now, the donation there is State Flood Victim Relief Fund and there's Royal Elite Brothers Club. So is it the
My
summation of the
brother,
two?
my brother,
Sir?
were you in the class when I taught donation? I have told you that there are criteria for donations to be allowed. That royal something is not even part of our criteria. It's not allowed. But again, and I also told you that there are two types of donation. You are making me go back. I don't like that. There are two types of donation. Donation that restricts our donation to 10% of total profits. And we are saying that in this regard, Schedule 5 of CETA gives us the list of bodies in which if a company makes donations to, will be allowed. This has been the donation that the Act has always allowed before COVID-19 came. And when COVID-19 came, the Act also introduced a subsection to Section 28 of CETA, where it talks about donation during pandemic. Go and read my notes that I sent to you. And other exigencies, which we said that donation shall be restricted to 10% of accessible profits. So that one is different from this general donation. And by virtue of the fact also, donation to Royal Elite Club is not an allowable donation. So note that clearly.
Thank you, sir.
You're welcome. So now we need to go and compute our capital allowance. So you can see in this question, you already did. Oh God. Oh yeah.
Apologies. It seems there is unrelieved loss brought forward in the question.
Oh, okay. If there is unrelieved loss brought forward, that comes before capital allowance. You remember what I told? I said loss has priority over capital allowance. So we say loss brought forward. How much is loss brought forward?
55.9 million.
59.
55,900.
Okay. For loss, you can relieve everything, isn't it? So from what I taught you, I said if a company makes loss, the company has rights under the tax law to relieve all the losses, right, against the profits. So relief for the year. This is the problem we have. I take everything. That means this company will not have to pay tax. The implication of that is that you have to compute minimum tax to check. Now, in any question that examiner gives to you, where you see turnover, okay, and dividend and other income, you have to calculate minimum tax. So what is the difference? So loss carry forward. Capital allowance. You need to go and calculate capital allowance. Before some of you start running away from the class now. So let's calculate our capital allowance. So computation of capital allowance for 2022 year of assessment. How many assets do we have? We have industrial building, non-industrial building, manufacturing plants, motor vehicle, furniture and fitting, and capital allowance. QC rates, initial and annual allowance. So for industrial building, it is 15, 10, 15, 10, 50, 25. Examiner will give you this rate. Do not cry. So in 2022, tax now value costs. So I'll take you back to my explanation the other time, which is for industrial building and non-industrial building. We said they have used how many years? 4 years. Abi? So how much is the tax now value that we are bringing into this year? We are bringing, because this tax now value that you are given at the end of is going to be our opening balance for 2022. So for industrial building, we have 10 minus 4 years. Non-industrial building, how much are we bringing in? We are bringing in 5.2, 5.4. On manufacturing plants, we have said manufacturing plants are used 2 years before now, according to our computation. So what is the value? 36. Manufacturing plant is supposed to use 4 years. So it has used 2 years before now. The remaining 2, we'll take it out. Motor vehicle is 2.5. Four minus 2. The last one, furniture. I'd only use 1 year. Furniture is 5 years minus 1. So what do we have? Give me my values. Give me my value. Am I still talking to someone in this class? Hello?
Yeah, with you, sir. But just try to see what you're writing. I can see it now.
Okay.
That's 4. Okay, industrial building.
How much?
700.
700 is the annual allowance on it for that year. And that's what will continue. What about this?
On industrial 900.
What about this?
1,800.
What about this?
1,250.
What about this?
450. 450.
This is the old assets. On new assets, did we acquire new assets? Yes. We acquired non-industrial building, improvement to industrial building. Abi?
Yes.
Improvement. Industrial building. On the new one, to calculate your annual allowance, is going to be cost minus initial allowance divided by N. Abi? So the cost of that asset is 1.4. Abi? So I'll first calculate initial allowance on that, which is 15%. My initial allowance, 15%, what do we have?
Sorry, sir. Please, where is the industrial building? I'm not sure.
210.
You
Hello,
mean the
sir.
improvement? You mean the
Yeah,
improvement?
the improvement. Yes.
Go and
Is
look
there
at
now?
the information.
Because I'm seeing motor vehicles delivery van 1.4.
Additional information 3.
Additional information 3.
Yes. That's improvement to industrial building.
Okay. Thank you. I've seen it.
Okay, now. You seen it?
So,
Yes, please.
so initial allowance is 2,210.
I'm coming.
Okay.
So the other one is what? So what do you have for initial allowance?
210.
210. So for me to calculate my annual allowance, it will be costs 1.4 minus 210 divided by 10 years. What do you have?
Yeah. 119.
119.
Yeah.
Abi?
Then.
Good. I want to do something. So I would say total AA. Total AA. So this 119 plus this 700 will give us how much?
890.
So that is that on that first form. The second one, there is no additions to non-industrial building. So my total AA for that will be 900. Abi?
Yes.
Manufacturing plants, is there addition to it?
Yes, there is. It's an addition.
Okay. Addition to manufacturing plants. So manufacturing plants, the initial allowance of that, let's first calculate initial allowance. How much is initial allowance? 50% of the cost. How much?
1,200. 1,200. Yes.
So 50% of that.
600.
Abi?
Yes.
AA of that will be 12 minus 600 divided by 4. What do you have? That would be 150.
Yes. Yes, 150.
So 150 plus 18.
That'll be 1,950.
1,950. The next one, motor van.
Yes. Motorbike, yes, there's addition.
How much is the addition?
1,400.
1,400 times 50% for the initial allowance. You
That'll be
have
700.
700. Abi?
Yes.
AA will be 14 minus 700 divided by 4 years.
Oh,
How much?
175. 175.
175 plus 1,250.
1,425.
Yes. Manufacturing plants. F&F.
F&F, 900.
Times 25%.
900, not 90.
We need to get IA, which is 900 times 25%. What do you have? AA.
225.
225.
Yeah.
So AA will be 900 minus 225 divided by 5 years. What do you have?
135.
135.
Yes.
135 plus 450. What do you have?
85.
What do you call it?
585.
585. So we now have all our annual allowance calculated. So I go to my table. Let's do my capital allowance here. Capital allowance computation. You know the name of the company, so no, we already put it somewhere there. Let's just go and pick it. Okay. So taxing now value for industrial building is 40. Abi? You can do it in 1,000.
Yes.
The other one is 54.
54. MP
The other one
is
36.
33.
The other
MV
one 25.
F&F 18.
1,008. And the other one, okay, we don't have. So costs. We have addition for industrial building. 1,400. On that cost, we calculated our initial allowance to be, what do we calculate the other time? Initial allowance. We calculated 210. Excuse me. 210. Annual allowance. We have calculated it. I'll just put the figure. No calculation is required. Our annual allowance is 819. Abi? Good.
Yes.
819. We go to the second one. Non-industrial building. There is no addition. So our initial allowance, nothing. Annual allowance that we calculated the other time. 900. On motor manufacturing plants, there is addition. Addition is 1.2. On that addition, we calculated 600 as initial allowance. And our annual allowance, we have calculated that we have added it together. Annual allowance that we calculated, we have 1,950. 1,950. The next one, cost, motor vehicle. Our motor vehicle, we had additional 1.4. Abi? So 1.4. On this one, our initial allowance is 700. That is 50% of that 1.4. But we move on again to get the total annual allowance that we calculated on that. On motor vehicle, what's our total annual allowance? We didn't calculate it. Okay, so 1.4, 700 divided by 4. What is that number? 700 divided by 4 is what?
175.
175. $175 plus 1,250.
1425.
1425. 1425. The next one, motor furniture and fitting. Is there any addition? Yes, addition. 900. 25% of 900. What do you have the other time?
5.
225.
Yes.
So, and our total that we
585.
calculated the other time, 585.
585.
So we now add everything together to get our capital allowance. So what do I have for my total initial allowance? My total initial allowance is 1,735,000. The other one is
5679.
Because we are still in 2022. In 2022, we used to have what we call investment allowance. So I'll bring it in for the one that is affected. So for investment allowance in those days, it used to affect plants, equipment, and machinery. And the rate is 10% of the cost. But that will not be used to determine our tax nominal value. And we acquired manufacturing plants. So 10% of the manufacturing plants is 120. Where's my so investment allowance 120. So total capital allowance. What's my total capital allowance? My total capital allowance now is 737534. My tax now value. Tax down value will be this plus this minus this 2. The first one you will have 757145. This one we have 2250
50
1775
177
and 189.
890.
So this is what we need for all this count. So I'll take my 7534. 7534. So I'll take it to my computation. Capital allowance for the year 7534. Carry forward 7534. You cannot relieve anything. Total profits, nothing.
Hello, sir.
Company income tax, yes.
There is capital allowance brought forward.
Oh yeah, now let's add it.
$16,155.
How much?
16,155. 16,155.
For the year 7534. Add it together, whatever you have, you carry forward. Total profit, nothing. Company income tax at 30% of total profits, nothing. But tertiary education tax, as at that time, it was 2.5%. 2.5% of accessible profits. Was it 2.5 or 2%? Yeah, 2.5%. So 2.5% of our accessible profit. This is our accessible profits. This one. So 2.5% of this, whatever answer you have, you put it there. But now, this guy had now made loss. That is, the loss that the company made cannot absorb the capital allowance, and the loss is also more than the profit. So does that mean that this company will not pay tax? The answer is definitely not yes. So we need to check the minimum tax. Minimum tax. You remember I told you before now that minimum tax will arise where, number one, there is no accessible profits There is no total profit rather. There is no total profit. Number two, the company income tax computed is less than minimum tax computed. Where the profit of the company results into no tax payable. Where the company also has, where the company has a turnover greater than 25 million, you check for minimum tax. So minimum tax will occur in any of these situations. Now, when you look at this question very well, this company had made loss. That is, there is no total profit. So we need to go and compute minimum tax. How do you compute minimum tax? I have told you, minimum tax shall be computed at the rate of 0.5% of turnover less frank investment income. The frank investment income here is dividend. Now, you remember during COVID in year 2022, the minimum tax rate was reduced to 0.5%. So that is what we are going to possibly use to check the minimum tax. So during COVID, minimum tax was reduced to 0.25%. And that covers, okay, this one does not cover it. And that covers from 2019 to 2021 financial statements. Okay, so this will still be 0.5. So what is our turnover? I explained to you in my last class that turnover is the aggregate of your sales in ordinary course of business one. Dividend, rent, royalty, interest, and any other income attributable to the business. So what we are talking about here is gross turnover according to the Act. Therefore, how do I get my gross turnover? I will go back to my question. In my question, my gross turnover is 165. Oh, sorry. Turnover is gross turnover will be first. We have turnover. How much is our turnover? 278. Stop. 278. 500. Abi, add dividend. You gross it up. You gross up the dividend because it has to be gross. What is the gross up of the dividend? 360 divided by 0.9. That will be, I think, 4,000. You will now add other income, profit on other operating profit, 1.8. So your gross turnover is what? The addition of these three. You will now less frank investment income, which is dividend again. 4,000. Also, answer that we have would be our net turnover, and that answer we multiply by 0.5%. So that means this company is going to pay dividend on whatsoever answer that we have. So what do we have? Total turnover of this company is 284,300. Subtract this, we have 280,300. Okay, I'm with you.
Sorry, I'm lost here.
You are lost. Why are you lost?
I'm lost. Okay. When you're calculating the turnover, you said our turnover is our gross turnover. You said it will be turnover plus dividend. And here you said dividend is 36, and then you are stating 4,000 again. So I don't seem to get which one. How do we get the 4,000, sir?
We gross it up.
Okay, because it's net.
Yes.
Okay, thank you, sir.
So when you have dividend in P&L and you want to disallow it, or you are saying it's not taxable, you are only going to take whatever your examiner has given you. That is what has affected our profits. Do you understand me? So if it is net, it is going to be net. If this is gross, it is going to be gross. Do you get? Okay. So, but in this situation, you have to gross it up to get the actual dividend. And though it will not have any impact, you can see that it is in and out. So 5% of 280 of turnover, 5% of 280,000 would be what? 1,402. So it is this 1,402 that the taxpayer would pay. Because that now the guy does not have profits. Okay, it must pay, the company must pay what? Minimum tax of 1,402 as their minimum tax. Now, what is the examiner asking us to do? The examiner wants you to advise them. They say, as that you are required to prepare a report which should review the following: adjusted profit of the company for the year, tax payable for the relevant tax year, and advise the tax implication of dividend received to the company and its shareholder. Now, in that regard, they are trying to talk about the section 19 of CETA that I've explained. Again, they also said comment on the tax benefits and incentives applicable to reconsidered company. We have said that the company will not be assessed to tax on commencement rule. They are allowed to carry forward their losses, and asset will be taken over at tax nominal value. Okay, and those are the few points that I have for you. So, in case you have any question, I am available to answer the question. So, read what the examiner has written as the implication, and therefore that will be our conclusion for today's class. We have discussed everything that you need to be successful under company's income tax. So please read your notes, read all the notes that I've given to you, and in case you still have any further question, do not hesitate to reach out to me. This is the end of company's income tax. From next week till the end of this class with you, I'm going to be talking about hydrocarbon tax with you. In case you still have any question, do not hesitate to reach out to me privately. Okay?
I have a question, sir.
Okay.
Okay, my question is this: is it like ICAN's practice to make company income tax question 1?
It is a practice, and when you look at in the last 5 or 6 diets, you will always see question number 1 as company income tax. If it is not pioneer legislation, it should be ordinary company income tax. Because you remember, the principal act that guides pioneer legislation is Companies Income Tax Act. Abi? And Mr. Idris has taught you pioneer legislation. Has he not taught you?
Maybe.
He has taught you. Has Mr. Idris taught you pioneer legislation? Hey, you are not talking, no?
Yes, yes.
You are not saying anything now. So when you look at the last few diets, last diet, it was pioneer legislation that was in number 1, which is the same thing as company income tax. Okay? 2 diets ago, they said company income tax. 3 diets ago, they said pioneer legislation. So it is in between the two as your number 1. So
right.
you have to study your past question very well. Read my textbook. For those of you that you have my textbook, if you don't have, no problem. Mr. Idris has given you materials. Read those materials that he has given to you. The examiner usually tests this as number 1. Your number 2 or 3 question is under hydrocarbon tax. And that is why I'm also going to take that in my next class. Okay?
Okay, sir. Thank you, sir.
Do have a nice weekend and enjoy the rest of it.